Hello, I'm Pierre Schlosser. Today we're joined by Lucia Quaglia, who just gave a talk today in Florence on banking resolution. Lucia, would you say there are many actors at the EU level which are now involved in the resolution process of banks? Who would you say has the final authority in this process of resolution?
So the decision-making process on resolution within the single resolution mechanism is indeed very convoluted. There are several different policy actors involved: the ECB, the Commission, the Single Resolution Board, national resolution authorities, and also the Council of Ministers. So I think there is still, or there can be potentially some lack of clarity as to who is responsible or who is actually taking the final decision. By and large, it's very clear that the Single Resolution Board will decide on systemically important financial institution, cross-border bank, and the National Resolution Authority remain competent to deal with non-systemic, non-cross-border bank. I think perhaps the most convoluted part of the process is how to take decision within the Single Resolution Board and the involvement of the other policy actors.
You've lived in the UK for quite a while. What's the UK perspective on this single European resolution mechanism, and why didn't the UK join this mechanism? What are the key differences with the UK approach on resolution?
So the UK did not join Economic and Monetary Union in 1999, therefore is not a part of the single currency. Now, this is important and is a major difference as compared to the countries which are in the euro area and therefore have adopted the euro. By and large, all countries, regardless of whether they are in the euro area or even in the European Union, face what some economists call a financial trilemma between the financial stability of the financial sector, financial integration, international financial integration, cross-border financial integration, and national policies for regulation, resolution, supervision of banks. So this is a common problem or issue for all countries. It's also particularly acute in the euro area because the level of financial integration is actually higher than in other jurisdictions. The difference between the the UK and Euro area countries is that the Euro area countries face not only a trilemma, they face what I call an inconsistent quartet, because on top of the trilemma of financial stability, financial integration, cross-border, and national policies for resolution, supervision, and regulation prior to banking union, they also had a single currency. So that was the fourth element. That's why the trilemma became a quartet. And the fourth element, the euro, means that the lender of last resort is no longer at the national level, but hasn't really been moved at the euro area level. At the same time, there are extra constraints on the policy space, so to speak, of euro area countries. The UK didn't have this fourth element, this extra constraint, and that's why there was really no need for the UK to join banking union. So the UK decided to opt out, to be precise, not to join banking union, not to join the single supervisory mechanism, and therefore not to join the single resolution mechanism. I would also say that if we look at the structure of the banking system in the UK, it's a banking system which is very internationalized rather than just Europeanized, by which I mean that there are many EU headquartered banks operating in the UK and vice versa, but there are also a lot of non-European Union banks operating in the UK, and also a lot of British banks are operating outside the European Union. So it means that global financial stability for the UK is somehow more important than for euro area countries. To put it the other way around, financial stability in the euro area is important for euro area country, is a bit less important for the UK, which has a very globalized financial system. So I would say that on top of this, I merely mentioned economic reason why there is less incentive for the UK to join banking union. There are also very important political reason, and very much in a nutshell, so to speak, very briefly, supervision and in particular resolution, they are very much linked to national sovereignty because sometimes have implication in terms of taxpayer money being used, but also in terms, how to deal with a run on the bank and how to secure domestic deposits. So it's a matter that is really interrelated to national sovereignty, which has always been a key concern for the UK policymaker and public opinion when deciding on European Union initiative. So that is the political reason as to why there is much less interest, if not outright opposition, to join banking union in the UK.
Thank you very much, Lucia, for these insightful comments, and we wish you best of luck for the new book which you're working on the European Banking Union, and we wish to see you again very soon at the European University Institute. Thank you.
It was a pleasure.